I'm filming this on April 1st, and it isn't an April Fool's joke, I promise. I'll be going over portfolio updates from month 10 since I started investing my full paycheck and living out of my Robinhood brokerage account at the end of May 2025. We're getting very close to a year of running this strategy, and yeah, I'm excited to get to the end of May and do a big year's recap on the strategy and kind of talk about learnings and like how it's felt kind of doing this for a year now. But for today, though, I'll be going over the performance during the month of March, dividends received, go over my month's expenses as well, too. Given the layoff and everything. Some of that stuff didn't quite go as planned, so we'll dive into it. And then also portfolio thoughts from the month. As always, I share all of my numbers with radical transparency, and you can see my full portfolio and performance with no paywall. Everything is linked in the description below for free if you want to follow along and poke at the numbers yourself. Specifically my Snowball Analytics portfolio, which is there for free. As usual, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risks, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. And before we properly get started too, as a refresher for anyone that's new to the channel, this is the monthly flow chart that I use currently in my layoff to still invest 100% of unemployment income that comes in and still live out of my Robinhood brokerage account. I invest 100% of my income. Previously, I invest at least 10.8K a month, but now it'll be $1,152 every week for the next couple weeks until I start my new job. I invested normally in growth and high yield ETFs, but with the layoff, I'm focusing on safer high yield ETFs for now to keep my monthly cash flow growing. So think SPY, QQQI, TSPY, TDAQ, MLPI, XPAY, things like that. I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account, and I use cheap margin of 4.5% to pay all my bills and bridge the gap between my monthly dividends and my monthly expenses. The goal is to ideally never sell a share to take money out of the account, apart from when I'm rebalancing between funds. And yeah, I want to forever compound both my growth and high yield assets to eventually have my monthly dividends exceed my monthly expenses. If you want an in-depth breakdown video of the old chart, check out the video at the top right here where, yeah, I'll have to make a new video, but that'll be pretty similar to what I'll be doing once I start my job again. Let's just get started. All right, so if we pop over to Robinhood, so you can see that we had another little green day today, and it's red overnight after Trump's speech about Iran and war kind of probably continuing on for who knows how long at this point. So yeah, it's kind of red on that, but the last 2 days have been green, which has been a nice little bump up. But yeah, I don't expect that to last really. I'm sure it's just gonna go up and down like it's been going for like the last month, right? We've just been kind of like seesawing, just up and down, but kind of steadily going down. But in any case, yeah, so like on the day yesterday, I'm up 2.8K or 1.91%. On the week right now, I'm down 2.21% or 3.3K. On the month, I'm down 7.87% or 12.6K. So yeah, you can kind of see just the up and downs, but kind of constantly grinding down and just downward pressure from all the volatility and also just kind of my margin amplification kind of factoring into that as well. On the 3 months, I'm down 11.43% or 19K. Year to date, yeah, 11.43% or 19K. Same thing. We go to all, since I transferred over to Robinhood in July last year, down 7.5% or 11.9K. So yeah, just down overall. Like it's just been rough since November. Really, it's just been kind of steadily going down. Yeah, the margin amplification is definitely not helping in this case, but we'll see if there's a bounce back. Hopefully, it'll be like relatively strong to kind of make up a lot of the downward pressure that I've been kind of feeling over the last few months. But we'll see. Definitely, that's the dangers of margins there again, right? If we pop over to the investment sheet to kind of dig into some of these numbers more in depth. So with all that, if you kind of add up all my positions, right, the gross value of the portfolio right now is sitting at 317.2K. I'm using 167.1K of margin, and the net value is sitting at roughly, this was end of today before the overnights, but 150K essentially. With that, if we go over the total profits on both the total return side and on the unrealized gain loss side. So if we go off the total returns, that factors in like realized gains, dividends, and all the margin as well too. I'm actually up 32.5K or 21.68%, which is pretty nice. But then if you factor in, if you go on the unrealized side, that's a lot redder, a lot less nice. That's down 29.1K or 19.4%. So that includes, the realized gains from the rebalancing I did over the last month or so, and also just a lot of the gains I realized last year. There's a lot of the unrealized gains there, right? And just a lot of downward pressure, as I mentioned, from the volatility. Even the ones that should be a little bit more stable, given that they're indexed, right, and kind of getting the same volatility from the reference index, those are down. But hopefully as kind of dividends come up and it picks back up, hopefully these will get back out of the red here, and as I keep investing into them as well too. So I'll be pretty much focusing on TDAQ, TSPY, SPY, MLPI, QQQI, IUI, XPAY, and pretty much those, and then occasionally Chippy if I want some higher yielding stuff there. But YMAX and ULTY I'm kind of leaving for the time being. BTCI I might throw in from cash back and things like that, but not too heavy. Maybe if there's a pretty big Bitcoin pullback or anything like that. But that's where the numbers are at there. If we pop over to the margin health to kind of look at how things are sitting after the month. So went over the gross portfolio value, margin used already. If you apply my blended margin maintenance, which is 25% across the board now, to the gross portfolio value, you get this margin maintenance dollar amount here. So 79.3K. So this is what my portfolio value would have to fall at to basically trigger a margin call, right? And so do the difference between this and your net portfolio value. That's your margin buffer over here, right? So this margin buffer here, so Robinhood kind of calculates it based on the net portfolio values, right? So it gives you 47.15%. As I've mentioned a lot, personally, I don't like going off of this because this makes you feel a little bit safer than you are, right? Because you're 47% market crash is not likely to happen, right? But really what you need to be looking more closely at, I think, is the margin buffer on your gross portfolio value, right? So basically taking this margin buffer and dividing it by your gross portfolio value here. So if this gross portfolio value falls 22.3%, that's the equivalent of this margin buffer, and that's the equivalent of a 47.15% drop. So I think it's really important to keep that in mind, right? Because this is the full value of all your assets, and that's what's kind of swinging with the market, right? So so I kind of keeping this in mind, the 22.3%. So obviously this should be a lot higher as my equity kind of goes back up, and I'll be investing my full paycheck again. This should kind of come up nicely. And then, of course my equity is at 47.3%. And like I've mentioned as well too, given the layoff, I'm kind of okay with this dipping under 50% temporarily. But once I start my new job and get my signing bonus, my full paychecks, all that good stuff, and also my tax refund soon, I expect this to push up over 50%, which will be nice. And then I'll do a better job of managing that to stay above 50%. If there's a week where it dips under 50%, then that might be a week maybe where I don't invest my full paycheck, right? And just let it deposit potentially. So and then with my buying power, so if you take the margin total minus out your margin used, that's your buying power, right? So I'm sitting at 73.1K. And then if you half this amount, this is basically the cash available for withdrawal, roughly 36.5K. So this is actually cash I could take out of the portfolio if I wanted to, really, or even invest it. But I want to keep this buffer pretty healthy in the portfolio, and just stay as far as away from the margin maintenance number as I can, right? And with that too, what makes up the 317.2K is 166.9K of that is growth assets, and so 52% roughly, and then the high yield income assets is 150.3K, so that's for roughly 47%. So that's what kind of makes up that full amount there. And right now the dividends are sitting at $4,557 monthly, roughly. So that gives roughly a distribution yield of 36.38% if you go off just the assets that are invested into high yield income assets, right? If you go off the full taxable portfolio, it's sitting more at 17.95% for the portfolio. What's important to note here too is that so with the margin interest rate, 4.5%, I wish my mortgage was 4.5%. I'm actually sitting at 5.95%. So really the monthly cost of kind of holding all this margin, right? So quite a bit, 167K, is $623. So really I'm paying $623 a month to basically make $4,557 a month. So pretty good deal, honestly. Even if you factor in my HELOC cost, which is over here, $395 a month. So between my margin costs and my HELOC costs, really my monthly interest is $1,019, and paying that to make $4,557, which is pretty good. So a $3,000 spread, which is pretty good overall, I'd say, as far as spread there from the debt that I'm taking out to income that I'm making with it, right? And that's all the numbers there. If we pop over to Snowball, and kind of dive into like some of the categories here. So not too much change from last time, right? High yield anchors now are sitting higher now, which is nice. You kind of saw that they bounced back much nicer than the singles and ultra here. So the ultras, this is all in the red with with how much yield these guys pay out, and they just haven't been able to keep up. I expect Chippy to kind of catch back up as it's kind of gonna pump back up. And yeah, I might still kind of throw some in Chippy every now and then, but yeah, I'll mostly be focusing on what's in the anchors over here: XPAY, TSPY, TDAQ, SPY, QQQI, MLPI. So as I kind of keep investing in these, and kind of as the market kind of bounces back up, I expect these to kind of eventually get back out of the red, which will be nice. And yeah, XPAY is still sitting nice at 17.88% or 7.7K between its capital gain and its dividends. Yeah, TSPY, TDAQ, SPY, QQI all got hit with like the war volatility. So these have kind of like come down some, right? And MLPI holding up nicely on the energy side of things. On my hedges, kind of closing the gap here. Out of the red for CLSE has had a nice bounce back this week, or is kind of on the way back out too. So yeah, excited to kind of see these do their thing and kind of more normal market conditions as far as being low beta plays and kind of being a little bit of the stabilizer in the portfolio on the hedge side. And then my anchor ETFs on the growth side, yeah, VU, VGT, SPMO, SCHD, all doing good. VGT and SPMO kind of crawling back out there with the little bump up we've had this week, but we'll see. There's gonna be, I'm sure there'll be more downward pressure there, but SCHD, QQQM, and VU all holding up nicely. And if we go to the growth side of things, so if we kind of isolate stuff for the month, really, so just from March, so we can kind of see that. Yeah, I'm behind the S&P this month by 2.17% or 3.1K, right? If we kind of compare it here actually and kind of look at the exact numbers here. So really the S&P was down 5.44 this month with all the volatility, so 8.6K. So this pretends as if you were investing in the S&P the whole time versus your portfolio, right? Anytime you make a buy. And then mine is down 7.46%, so 11.9K. So really, the extra downward performance just comes from the margin, right? I'm just kind of amplified a lot more on the bottom. So you can kind of see sometimes I peak back up, but then as there's been a down days, I've had more pressure on the portfolio there and harder time recovering from those. So we'll see. But yeah, like I can say like an up day like here, and kind of saw how like this was a nice up there, but you kind of need to kind of keep that going for yourself to kind of crawl back out of there, right? And then if we check on my favorite, the heat map here. So if we isolate this to March to kind of see how the month's looking. So yeah, a lot of red. I think a lot of people saw the same stuff in their portfolios, just with, just the war in Iran kind of extending, and yeah, just a lot of downward pressure. So really, yeah, Bitcoin held up surprisingly well, up 4%. Energy trade with MLPI held up well at 3.1%. But everything else just got hit pretty hard. SCHD got hit, VU and XPAY and all the linked ones, TSPY, SPY, all that. SPY actually held up nicer with its dividends, kind of gained 1% there over VU and XPAY, which is nice to see. TSPY got hit a bit harder than the index, actually, interestingly enough. Yeah, SPMO kind of in line. More than SPMO got hit. Yeah, even more than VGT, interestingly enough. So the momentum plays there kind of working against them. CLSE kind of holding up its end there, just down 1% this month. So that's kind of nice to see, kind of the long short kind of working in their favor there, or not so much because they've had a lot more Japanese exposure and international exposure, so that's been getting hit harder compared to the rest. But yeah, just interesting. Love the heat map here to just kind of really see at a glance how stuff has performed over the month, right? Love this view. And yeah, year to date, how that's kind of looking. But we'll dive more into that into like the weekly portfolio update for that one. And then as far as the dividend calendar for last month, if we pop over to thing, so made roughly 4.5K here on the month. So yeah, I think this is with, pretty much all my rebalancing. So I think GOW was the last one that I got from before when I was still holding that, but everything else is kind of with the new state of affairs as far as like all my positions, right? Yeah, my weeklies are kind of chippy, ULTY, and YMAX, and then everything else is pretty much monthly at that point. TSPY, XPAY. I got my last Microsoft quarterly dividend there, TDAQ, BTCI, IEUI, MLPI, QQQI, SPY. It's all monthly, and a couple of quarterlies here that help bolster things between QQQM, SPMO, BGT, SCHD, VU. So yeah, good month overall. Like if we if we go to like the dividends and kind of see like, yeah, March was a nice leg up compared to February. So February was at 3.8K, and then yeah, so 4.5K there, right? So yeah, the nice leg up from there. So we'll see if we can kind of keep that going and keep that growing. And yeah, as far as my yield on costs there, yeah, I can kind of see that ULTY and YMAX. You kind of see like the NAV erosion here in play, right? So based on the capital that I have invested in there, and then like how much the average cost per share, how high it is, basically for the capital that I have invested, my yield on cost is actually 39% for ULTY. YMAX is actually closer to 34%, despite their week-to-week yields being 59% or 63%, right? Yeah, Chippy has eroded a little bit, so at 35.26%. BTCI has eroded a lot, so 16.94% for what I've invested into it. And everything else is holding up pretty solidly for all these lower payers, right? And this is a big reason why I want to focus on these guys, just because these hold up much nicely and they hold their yields a lot better. So yeah, just want to be building a better foundation in these over these guys that are kind of eroding over time, right? So I'm glad I started off the portfolio with them, and like I have that higher base, especially now during the layoff. But yeah, for now I'm just gonna leave them and then just kind of be focusing on these guys over here, which are really solid. As you can kind of see, the yield on cost is staying pretty solid even with like the little downturns it's had, right? And yeah, so that's in Snowball. If we pop back over to the sheet here, and we can kind of go over the charts and how they're looking ever since I started investing 100% of my paycheck. So these numbers date back all the way to May, at the end of May 2025, right? So you can kind of really see how things have been progressing, really. So yeah, you can kind of see like the gross value kind of growing month to month. This is like one of the rare months where the gross value, because of all the downward pressure, has actually come down, and plus not as much income coming into the portfolio. Yeah, the last time that happened was in November, looks like. Yeah, November was the last one, and that November was a big red month. But yeah, still sitting above 300,000 though, which is nice. Ended up being at 314.9K, so a little bit of a drop here, drop in net value as well, drop in the equity, slight drop in available for withdrawal, but I expect this to kind of start going back up next month. Margin buying power went down slightly. Margin buffer went down by quite a bit, like a little closer to 4%. Same for the margin buffer net percentage here. Then the margin buffer a lot given the downtrends. And yeah, the margin ticked up a little bit higher than normal given less income coming into the portfolio, right? So yeah, normally it should be closer to like 4.5K that gets added to margin month to month when I'll have my job again. And yeah, the dividend increasing here, as we can kind of see. So yeah, kind of good to see all the charts here and how they're progressing, right? So you can kind of see like how the net value went down, right? The margin value went up slightly. Kind of see how like all the margin, equity, buffer, and full and net percentage are trending. So kind of going down there. And yeah, same for over here. The margin buffer kind of going down, right? But margin buying power still kind of on the way up, right? And same for the available for withdrawal, which is nice. Still on a little bit of a downtrend with like the monthly dividends, but hopefully we can kind of reverse that soon enough. But yeah, it's kind of nice to see, like, especially starting in May, right? I started with like 205.8K of gross value. Now it's all the way up to 314.9K. Net value was 117.8K, and now I'm at 147.7K. So margin equity has come down some there. Available for withdrawals higher, which is nice. Margin buying power is a lot higher, and this is because of just the margin maintenance being a lot more favorable on Robinhood, right? And yeah, margin has come up a lot, almost doubled here. And yeah, monthly dividend kind of stable-ish, given all the NAV erosion that's happened for the higher yielders. But yeah, hoping to rebuild a more solid foundation from here with the safer yielders, right? But yeah, great to see the progression here and kind of just see that all visually. Kind of keeps the motivation up. And then as far as kind of how I'm tracking against my goals and progress and how things might look, I've actually updated the sheet here. So a couple things that have changed here based on kind of like that projection sheet that I was showing the other day, right? So the blended yield here, I just kind of put in my own number instead of kind of grabbing the one directly from the portfolio. So kind of targeting 15.25% between kind of like the safer yielders I'll be investing in. The growth rate, I'm kind of pushing that down a little bit as an estimate just because, I'm not going to be investing in growth as much anymore. So we'll see if I can kind of hit a 4% growth rate for the portfolio, despite being heavier into the safer high yield stuff. And then paycheck contribution, this will actually be closer to 10.7 a month. So I can update that. So on average, I should be adding roughly $135 a month to my monthly income with the full investment into like the safer yielders, right? So Yeah, so that's gonna be the strategy. 100% of my paycheck will go to like high yield, safer high yield ETFs, like I've mentioned. Any high yield dividends that come in are gonna pay down the margin, and anything that's from the growth side, those will get reinvested to the growth assets, and I'll keep withdrawing from my brokerage for bills as usual. So yeah, so you have our month of April here that came in. So put in all those same numbers that we were talking about. And actually, I forgot to update my available for withdrawal here. Cool. Just so it's more accurate. And yeah, so yeah, how that's tracking is that, yeah, by 40, potentially, I might have 966.9K in gross value or 671.1K in net value with a 295K margin balance. And then there, I might also potentially be at 11.4K in monthly dividends by then, potentially grown by then with how much I'm investing into the high yield ETFs here. So that's what I'm kind of targeting, right? The early retirement time frame here. So here, this is obviously not as high as I'd probably need it to be if I want to do want to hit early retirement. So like I mentioned, we might see that like maybe around the 60% mark, 65%, it might be a case where like maybe I do start reinvesting the dividends eventually once I get into like a safer territory as far as like the equity percentages, right? But yeah, we'll see as things come on. And then by 45, it's looking like I'd be at potentially 1.89 million or on the gross side and 1.85 on the net side, because at a certain point here, my margin balance just starts getting paid down, right? So it looks like I crest over here at like, yeah, 296-ish over here. And then this is basically like the crossover point where like my dividends received are a lot less than or are more than my monthly expenses, right? And then any extra goes towards paying down the margin balance. So that's why this starts kind of going down more aggressively until you reach even a point of zero margin balance potentially by a little past the 45-year-old mark here. So yeah, that's where it's looking like there. Potentially December 2035 for no more margin, just more like here actually. And then for the gross, this is kind of sitting more at like potentially July 2032, net monthly salary covered. So that's like 10.7K roughly. That's going to potentially be at February 2030, where my monthly expenses are covered. That'll be like, yeah, July 2029 it's looking like as a projection. And then for my extra net paycheck covered, that's, yeah, pretty much here, looking like potentially November at the end of this year, if these projections hold up. So yeah, I'll be updating these projections and shifting stuff as stuff happens. But yeah, just kind of nice to kind of get a rough idea of where this will land. Like this is not going to be like 100% accurate, but personally, I always kind of like to see where I'm roughly going. And yeah, then I'm glad I ran these projections for the dividend reinvestment, right? Because that kind of just shows me that like, okay, maybe the margin balance gets a bit too crazy for my taste, right? So yeah, important to do these projections, I think personally. So yeah, that's where stuff is going as far as like the projections and the goal progress. And yeah, one last thing I want to do is go over my Monarch expenses. So I know I mentioned that like I was trying to kind of like cut down expenses quite a bit this month given the layoff, but honestly, once I got the job like a week ago, I kind of like laid off the brakes a little bit on kind of withholding spending so much. So I kind of pretty much hit like a normal spending month as far as like the upper end of it, like the 9K. So like my spending fluctuates anywhere between 7 to 9K depending on the month, right? But yeah, let's kind of see how stuff broke down. So paychecks had like 8.2K come in. And that was really the unemployment paychecks, severance pay, all that. Dividend income, that's the dividend income that we were looking at, 4.4K. Had my rental income come in, $500. Dividends from retirement, from the retirement account, so my Roth and traditional IRA. Business income, this is all the YouTube income, right? So YouTube income, any referrals, things like that, $286. Cash back from credit cards, $129. And a little bit of interest here, 42 cents. And if we look down at like the bulk of my expenses, so yeah, with all that, that's 14K of income. All said and done, it's pretty good, given that like my salary used to be 10.8K a month, right? Because like say on a normal month, like if we look at January, right, this would have gone up to 16.3K between all that, just because of the business income, dividends, all that. So yeah, a little bit of a drop there, but not too bad, all things considered. So just $2,000 difference. And then, so for my expenses, it's sitting at like 8.86K essentially. So just under 9. And yeah, overall, if you minus those out, the actual net savings are 5.1K. That was probably roughly a net add to the portfolio, right? So a 36.8% 8% savings rate in that way. And yeah, and if we break down the expenses here, so the bulk of it is the mortgage, right? So just under 3,000. Yeah, me and my fiance, we love going out to restaurants and going out to stuff. So this is up there. So tried to kind of cut down on the nice restaurants. I think maybe we just went to like one nice restaurant this month, but like pretty much when we wanted to celebrate. Actually, maybe a couple, but we're big on celebrating stuff, like the big and small stuff. So we definitely went to celebrate for when I got the job for sure. Groceries has ticked up from previous months because we were kind of eating home a lot more. My tax return done, so that's like a one-time cost for the year, $525. Veterinary had some shots for the dog that came in, and also some unexpected things that came in for the cat too, that she had some stomach issues we need to go check on. Entertainment and recreation. We actually booked a couple of shows for like later in the year. We love going to music shows and stuff like that. So that's at $391. Vision. I ended up getting some new prescription sunglasses with my partner's insurance that I'm under right now, given the layoff. And yeah, this is one, for example, that probably could have been cut right from the month, but like given that I got the job, I was like, all right, might as well just do it. Water bill, $356. Gave a bit to charity to some friends that was kind of having some medical issues that donated to, and then also just like a board that my partner is part of. Gave some to charity there. So yeah, this is another one that probably could have been cut as well too, right? So like if we kind of keep a tally of like what I could have just cut from the month to kind of keep it a bit tighter. Like, so if we cut like the vision here, minus 367, minus charity, 311, right? 311 minus 311. And then gifts. Yeah, this was another one where just like some future gifts for my partner, as far as like bring her to like a special baseball game later in the year, things like that. And yeah, I think some random gifts for friends that ended up happening. Like had I cut that, it would have been good. Electronics was like the work PC that I ended up buying. And then yeah, gas, which has gone up quite a bit just with all the gas stuff. Yeah, regular household items, stuff from Amazon that I need to grab. Gas and electric, $176. Pet food supplies, a lot of pet food stuff to grab between the cat and the dog, $137 that month. Internet and cable, $124. Haircut, $103. So quite a bit of expenses there. That's one I probably could have cut down on. But again, I was just like, once I got the job, I was feeling better about stuff. So like say I cut that down, $103, let's say. Would it be at 7.8K in expenses there? Pet insurance, $100 a month between the cat and the dog. We love going to our coffee shop, so that's $95. Pharmacy, just meds and stuff that came up. And yeah, I have high blood pressure, so that's meds for that. Subscription costs. This was actually ones that I cut down on, but like there were still some of these like latent costs that were still put on for the month. Yeah, just parking, since we have to whenever we go in the city, we end up parking, so we don't have to like hunt for parking forever. $46. My phone, $43 a month. Yeah, some medical visits, just copays. Yeah, just little hosting party that we had just to a friend's house. Yeah, we had to bring like our share of it, right? And yeah, a little quick public transit stuff, and then fitness. This is actually reimbursement just because, yeah, I had Apple Fitness previously, and then after like when the layoff happened, I was like, I could actually probably refund this because I haven't been using it as much as I thought. So I just refunded that whole thing that was like a year's subscription, right? But yeah, that's the monthly expenses. So like, yeah, a lot that had I not taken some of the extras there, I probably could have cut it down to 7.8K a month. But really, like when you look down at like the group of stuff, right? So my fixed costs are like, let's see here. So yeah, 4 plus 675 for my utilities, plus 634 for the pet stuff. So yeah, my fixed cost this month was like 6.2K. Particularly heavy month because of some of the pet costs and stuff. But like, yeah, so there's only so much that's discretionary spending on top of it, right? So between like had I made those cuts and then on top of the fixed costs here, like yeah, that would have been like $1,600 in discretionary spending. And then obviously I did a little bit more at like the 8.8K, but yeah, that's where the monthly expenses are. Definitely in a high cost of living area, and also we just kind of like doing stuff and like going out to restaurants. So we kind of it tends to go on the higher side. Yeah, we don't have any kids, just us and our pets. So yeah, we just enjoy it, honestly. And yeah, that's the expenses for the month. And yeah, let me know what you think about this. Like this, it was maybe a little bit long-winded, but let me know if you're interested in kind of me breaking that down like every month instead of like not necessarily every week, but like every month, these monthly updates. But yeah, that's how stuff was sitting after the month. And yeah, and really like if we go to the month of March here too, between what I have invested, right? Like all those similar numbers that you saw. So really that kind of amounts roughly to 9,000 of monthly expenses. The way I kind of keep it fixed, if there's any overages, I do end up taking out from the HELOC to kind of cover it. So 1,346 came from the HELOC to cover some of those overages there. Because I just want to see exactly like if I stick to the 9,000 a month in the brokerage, like what the flow of the numbers are. So yeah, kind of a way to kind of force me to kind of keep my expenses down. So yeah, worked for this month at least for under being 8.8K. But yeah, that's the thing there. And yeah, so with that, like, yeah, as far as like net add to the portfolio, looks like it was kind of closer to 4.79K this month. If you factor in like the expenses and then what came out, right? What stayed in the portfolio was pretty much this after all that, right? After the whole paycheck and then all the expenses and margin and everything. So that's what it's looking like. And then next month, yeah, all the statements have kind of come in. So that's kind of looking like that. I'll have to draw a little $190 from the HELOC to kind of cover the difference here. But yeah, lot closer. Hoping to kind of get this to like zero pretty much on any future months, which I'm getting pretty close to just kind of keep a tighter lid on my spending there, to be really under the $9,000 max. But yeah, that's the monthly expenses there. And yeah, I'm sorry this video is like really running long, but like I just kind of like last few things there as far as updates related to the portfolio. Yeah, I'm still waiting on the refund from the IRS too for my 4.2K. So yeah, as a reminder, this is kind of what I'm getting here, right? Based on my AGI and my salary last year and all my deductions. So all this stuff that factored in, right? So yeah, hopefully the end of this week, if anything is timing from last year is anything to go by. I still have no traction on Washington unemployment to get my unemployment payments. So at this point, like they're going to owe me like 6 weeks of unemployment. So 1,152 every one of those weeks. At this point, I'll probably start my job before I even get the unemployment. It's like really disappointing that it got so delayed. And part of why I honestly kind of pushed harder on getting a job versus kind of just enjoying like a little bit of a break, a 1 or 2 month break before starting the full court press on job searching. So just unfortunate that the system is that broken. And yeah, and as a reminder too, like given that my stopgap measure is that I was withdrawing from my HELOC as if I was paying myself unemployment every week. And then when I do get that back pay, I'll just pay back the HELOC for what I took out, right? And yeah, and then I guess like as I mentioned too, just as a reminder going forward, once I start my new job, right, what I'll be doing is basically 100% high yield investments. So 100% of my paycheck will go to high yield investments, save for one. So SPY, QQQI, TSPY, TDAQ, things like that. I won't be investing into growth positions anymore for the time being outside of dividends received from growth positions. I'll be letting any dividends from my high yield ETFs deposit to cash and margin to help control the margin balance better as I keep withdrawing from the portfolio. And yeah, and really just that's based on like those projections I was running the other week and I kind of went over with you, right? But yeah, that's the month of March. So turbulent month, honestly. Yeah, between what was going on in the world and what was going on in my personal life with the layoff. But all things said and done, not too bad. Just like down a little bit compared to last month, but not too crazy. Could have been much worse, especially if I had my previous portfolio set up. I think if like luckily I rebalanced like right before the war broke out, right? Crazy timing there that was unexpected, but I think that helped me weather this month a little bit better than expected in that sense. So yeah, that's the video. It's a chonker today. Sorry about that. But yeah, as usual, a bunch of different ways to follow me and support the channel. You can do it on Blossom Social. You'll see all my posts, all my trades. Join the membership on YouTube. That option's there too, $3 a month. You get a bunch of little perks. Nothing too crazy because I don't want to paywall any content. I want to keep everything free for people. Yeah, Snowball, if you want to see my portfolio for free. The links all in the description below. All the links for this are in the description below. You can see all the same numbers that we're looking at together and kind of poke at them yourself and kind of see how things are going. There's a Patreon as well that I upload all my backlog to, and there's also a membership there in case you want to support the channel that way if you like Patreon versus YouTube. And then of course the Discord channel. Yeah, 350 members strong now. Love going back and forth with people in between videos here. You get all my trade alerts. Been doing a lot of cash back investing as soon as it comes in with my gold card, which has been nice. And you get a heads up on all my buys with my unemployment checks, my paychecks and all that before the videos go out. And yeah, just a lot of people living out of the brokerage and kind of posting how they're doing and kind of trading ideas and thoughts and feedback on their portfolios. And yeah, there's no one good way of doing things, right? It's a lot of different ways you can approach stuff based on your situation. So check it out if you want to be part of a community of like-minded investors. Totally free. Again, don't want to paywall anything there. So yeah, if you appreciate the transparency and you want to keep supporting the channel, please give a like and subscribe. Hit the bell notification for future videos. And I'll catch you in the next one. Hopefully the full tax return refund investing video, if all goes well this week. Otherwise, it'll be my weekly portfolio update. So catch you in that one. Peace.